All right, guys, welcome back to the channel. Thanks for stopping by. Got a very impactful short video for you guys, so stick around. I want to talk to you guys about specifically why the thumbnail says that the smart money is hedging. All right, because something interesting is happening in the SPY, QQQ right now, frankly the entire market. But price is strong and the headlines are kind of loud. You got Jerome and Powell going back and forth. We got the investigation. We have data coming out, and we also have these geopolitical environments that shape price, right? However, if you understand why smart money is hedging at the highs, then you're probably going to start chasing moves. You don't want to chase moves. You want to start trading the move, right? So smash that like button for me real quick. Let's get this halftime show to 50 likes on YouTube so it pushes it to traders who actually want to grow, just like you guys are. All right. So if you're new here, welcome. All right. Welcome. This is the unique trading group where strategy meets mindset and discipline turns into income. And if you're new here, like I said, welcome. Let me show you what we do here. This channel is about execution, not hype. Price action is human behavior in real time. I'm talking fear, greed, patience, urgency, all printed out on a chart. And once you learn how the institutions respond to these emotions, you'll gain the real edge and hopefully not ever trade or look at market the same way again if you're looking for consistency. All right. So before we get into that, I want you guys to see a recap from 2 weeks ago about a trade signal that I gave out. We're going to get to some economic data. The SPY is ready. The Qs are ready. Hope you guys are ready for this packful video. So stay tuned, stick around, and we'll be right back after this break. All right, guys, now right in front of you, we got some economic data to worry about coming up tomorrow and the rest of the week, especially next week. We got GDP. We have some unemployment claims tomorrow around 8:30 before the market opens up at 9:30 Eastern time if you're on the eastern side of town. We also have the Fed members speaking, right? 5 in the morning. We got some more speakers that are going to be speaking, the Fed members, on Friday. Next week, we have CPI, more CPI, and of course, we have that final IPM or PMI number on Friday, January 23rd. So it's going to be a very, very volatile week. You guys get prepared. These data points that come out throughout the session from 9:30 to 4 o'clock, they do affect price. Volatility is present. So if you're not familiar, the trade setup that I give you and you're not aware of this time, it could mess up your timing. So I want you to be aware that this is an economic data form that comes out, that gives out data. It could be interest rates, inflation, GDP, right? Gross domestic product is what that stands for. And each week, each month, this is available ready for anybody who's interested on forexfactory.com. That way you can check out data and get different information to know what time is price, going to make these moves based on the data that's released. All right, so let's go ahead and start with the big picture. We're going to move over here to the SPY, and as you can see in front of you, we've been making these higher lows and higher highs. But I warned of some sort of movement before, and I want to take a quick moment to just recap, and we're going to get right into that video so you guys can see exactly where we're headed. I want you to see this game that I'm giving away, but I want those new people who are watching to see the accuracy so you can catch up to where we are, so that way it makes more sense to see where we're going. And we're going to do that real quickly here. Bear with me as I play you this quick clip, all right?
Got on the monthly, all right, all bearish signals pointing towards possibly falling back towards down here. All right, that's what I wanted you guys to understand. Now, I will not take a trade towards the upside on SPY unless we get above 683 and 39 cents. Okay, 683.25, 683.30, 683.39. Why is that? These are daily and monthly ranges of open and closing price. Okay, this is our previous close from last month, 683. So remember that. Okay, remember that. Previous opening and closes are going to act as a pivotal point where money is already there. You guys gotta remember these things. It's going to be very, very important to you. Now, let's.
All right, now I wanted to give you that quick little recap. As you can see, that number was 683. Now, this video was recorded 2 weeks ago, 12 days ago to be exact. And I informed the whole YouTube community that SPY was in a moment of distribution, meaning there are going to be wild swings and retail traders are going to chase. But you got to understand context. You can't just click a screen and go trade. You need to understand context. Now, with that said, peep the accuracy. This trade signal for the next 30 days. It's been 2 weeks, right? And it's still playing out the way that I said. That number was 683, right? I said that I did not want to take calls towards the upside unless we got above that number. That was 2 weeks ago. And it's been 2 weeks since then. And let's see what price has done since my call out of 683. All right, let's go over to the chart. All right, we are on the SPY. Okay, and what do we have in front of us? All right, now this green line here represents 683.38, you know, a little bit close above that 21. Now that gray line represents a 21 exponential moving average. That's right. It represents 21 days of price movement. All right. And it's aggravated into that data point, that time frame, 21 days of price action. Okay. And so it gives you that. And I like to take calls. And I'm sorry for those who are new here. I like to take trades above the gray line. And I like to take trades below the gray line at high probability setups. Now, this video is not for that. But as you can see right here, okay, this is when I put out the video. A day or so before this actually happened, right? We were waiting for that at January open and we had the December close. But last month's close was 683. And if you remember, if you rewind the video or just remember that I said old closes and previous tops and bottom ranges, they act as critical pivot points. And what do we get? All right, that was on January 2nd. We stayed above that 683 number that I gave you, right above the 21 here. And we went up for the next couple of days. We came back a little bit, but we continued to go higher and we made all-time highs of 696 and 697. All right, now that was my trading signal 2 weeks ago. And now you understand what I mean, okay? That was my high probability setup. That was the big picture, part of the big picture. The second part of this big picture was about the hedging. Hedging is what really matters. And now you can see right now, as of today, on the 14th, we've bounced again off of the 21. Could this be another possible bounce towards the upside? Well, I tell you right now, for instance, on this daily chart, we continuously have higher lows and higher highs. Now, if you're new here, let me give you the explanation for the higher highs and higher lows. All right, what we call trend lines, because you need to be familiar with these simple terms when it comes to trading. And it's 2026, and of course I don't want to leave you guys behind. And so these simple things are going to be the foundation of how you find entries and exits. And so it's a trend, and you don't always get trendy markets, but I want you guys to quickly understand what I mean by higher lows, higher highs, and also lower lows and lower highs. Now, what do I mean by that? All right, this is the point. Okay, price left from here and we retrace back. But we didn't fall all the way back down here. No. We stayed right here. All right. And so this creates what they call a higher low. That's right. Higher low. All right. And each time you get that same move, all right, it could be here, right here, and right there. These are higher lows. And this is a uptrend. And so when you see this pattern, it's uptrending. Now, these are higher lows, but these pivot points right here, these are what you call higher highs, okay? Higher highs. And this is a uptrend, okay? This is an uptrend. Right now, if you want the opposite, it's a downtrend. And you have higher lows and higher highs here. This one will be lower lows and lower highs. I think you guys get the point, all right? Because I want to move on. I want you guys to see the big picture, all right? So the futures data. All right, now we got the Qs, PY, as you can see, the Qs. they look about the same, don't they? They do look about the same, all right? And so we're going to dive into that. But just understand that the institutions, they are hedging. Now we're going to move to a 30-minute time frame. And bear with me as I navigate this screen. Okay. Thank you guys for watching. Appreciate your time. Okay, now I'm on the 30-minute. Now what's next? What should we do and what should we be looking for? Now, hopefully it becomes very obvious. But the institutions were hedging weeks ago, okay? They were hedging right around here, okay? All right? Right around, let's say, here, okay? This area here, and this is around the second when I dropped that video, all right? When the market went up, all right? But we've been in this grind mode, this slow grind mode, up and down, all right? Inside of this range, all right? And that's what we have. We haven't broke highs. We haven't got to 700 yet, even though there are people chasing. But that doesn't mean that we're going to crash because they were hedging, all right? That means that the easy part of the move is over. And when a line that's up with SPY and QQQ, all right, it's options flow. Let me say that again. When I line that up with the SPY and the QQQ options flow, it confirms a lot of things, all right? So the call buying is slowing, protection is increasing, they're hedging. This is where most traders get emotional at, all right? They're going to get emotional at these areas, all right? Just expecting us to continue to go high when price is rotating. Now, there was a gap here, all right, that we created when we took those calls above that 683. The gap almost got filled today, but it didn't get filled. Now, I want to say on this chart, the move that we can look for here, right? Now, we have pendulum swings, all right? We have the amount below here, okay? Pendulum swings is the amount below, and of course the amount above, okay? Now, that will give us our 702 target. Okay, I do see the market hitting all-time highs past 700, but that doesn't mean that it's going to come with a pullback, right? And traders chasing. It's not going to go straight up. As you can see, it hasn't went straight up. All right, we've been having these choppy moves for the past 2 weeks. Not clear direction, but wild swings. Okay, traders getting chapped on both sides. And so we're here with this pendulum swing. You want to understand that when you get in, price could swing a little higher. Why is that? Because we fell here. Okay, and we bounced. All right, 1 second as I navigate the screen. As you can see here, once price got above here, we came back to pull back, found a place of demand, price got bought up, and we swung a little higher than the previous one, all right? Same thing here. We fell, we found a place of demand. After that gap got filled right here, the left side of my screen, we fell, price got bought up, and we swung a little higher than the previous one. You see the pattern? Now we came back, okay? Almost filled that gap, but we didn't, okay? And we could possibly swing and go higher, all right, inside that pendulum swing that I'm giving you guys, all right, before we take another leg down, all right? And you want to watch for that. I think that's the move a lot of people are waiting for, that big move down, because we still have gaps towards the downside, guys. Look right here. All right, right at 673, all right, and 680 is going to be a place of gamma, all right, where demand level was previously at. And so you guys watch for those levels. Hope that made sense to you. All right, now I want you to think about something. This is your execution framework for the NASDAQ and the ES, all right? This is the teaching mode, so I want you to be confident here. I want you to take your notes and understand. So how do we trade this? All right, here's the exact framework that I use. All right, step one is context. You want to know the context of the market. Are we above or below institutional control? You want to know that. Where is the institutional control? Now let's clear this chart. Okay, where is the institutional control? We're going to use the Qs so we can spot these out. Okay, where's the control at? Let's think about it. You see these pivot points here? All right. Do you possibly think on the Qs that those are the control points, or maybe these points where price has fell? Do you think that these are critical institutional footprints? I want you to ask yourself that question as I go over to SPY. All right. Now listen, the gamma is at 690. If you're not familiar with what gamma is, all right, gamma, I'm going to spell it out. All right. You cannot you cannot fly a plane without gamma, and you can't drive a car without fuel. Gamma is like fuel for price. Certain strikes, i.e., listen, over here to the right, we have 84, 686, 688, 689, 690. right? Like ones with zeros or the half numbers, for some reason, they follow algorithms, right? And so the institution footnotes come from where the gamma is. And so right above 690, all right, 690.05, that's exactly where price wants to explode at. Now, pre-market, we're a little bit below it. But before the market closed today, the time of this recording is 5:14 p.m., 14th of January. Price did get above it, and we did close above the 21. But we have to see what happens tomorrow in order to see what happens post-market and pre-market to be able to catch those prices. Now, gamma, that's what gamma is. Previous levels and institutional footnotes. And the gamma chart, right, that I disclosed with my Discord, it shows you these levels, and we trade with them live. That's right, my students and my mentees, we trade with them live so that we learn this system together, all right? It's about repetitive motion. We need to repeat these things the same way we repeat things in school or how to learn how to ride a bike, right? We got to crawl before we walk. Keep these things in mind. Now, that's context. All right, are we above or below the institutional control? All right, what about the range? All right, you need to mark the 1 hour range, the high, low, and the equilibrium, all right? So let's quickly do that. All right, we have the 1 hour time frame. All right, this is what you are to do tomorrow or even now with me as we're doing this. All right, you want to take the 1 hour time frame. All right, this is your trading signal for tomorrow and any other day. You always see this setup under the 21, above the 21. You can take the daily, the 4 hour, the 5 minute, whatever time frame you choose, and you can use this system. Okay, and so again, let's go ahead and mark our highs. All right, we want to mark the high of this current 1 hour candle. All right, and we want to mark the bottom of that candle. Okay, remember this is the bottom, and we're marking the range high and low in the equilibrium of this current 1 hour candle. All right, so the reason why this one is green, this line is green, because price has bounced from here before on this current candle, and this top one here we're going to make red. Why? Because it's resistance and price has not gotten above it yet. I'm sorry, let's go back to that. I'm going to click on this one, make it red. All right, now we have our range here. Now, what's next? Now, let's say we're on an hour, right? And you want it to, because now you have your structure, your context, your bias, right? And you want it to go to the 5 minute, right? Tomorrow, any day of the month, next week, and you see that we have this range expansion. Where's the equilibrium at here on the 5 minute? Well, you can see that we are clearly at a resistance level here. Now, if a trade happens and price breaks out, that's your breakout trade, okay? That's your breakout trade. Now, what would you see here, okay? What you would see is you would see price come out here, break away, all right? Most traders chase it. You don't chase. You wait for that perfect pullback. That's right, the perfect pullback to enter in right by that 21, all right? Once traders chase, okay? That's what you want to wait for, okay? Because there's a gap here that could possibly get filled, and you want to be mindful of that, all right? All right, there's an imbalance here. All right, 1 second as I navigate this screen. All right, we have a gap here. So I want you guys to remember, screenshot this and watch what could possibly happen. This one here creates a lower high. Remember, that's a trend down. We talked about that, trends, because this pivot point here, right, is higher than this one. So if we reject around this area, it is going to create a lower high for us to fall back down, but not to get too excited, right? Because we could pivot here and buy this higher low for the dip, for the buy of the dip moment. Because why? Because we have this big move down, right? All right, and remember the pendulum swing we talked about. Price can move back up towards 700 in these highs. You got to be mindful of that. All right, and so if you enter into a trade on the 21, let's say this entire range, right, from here all the way to here, right, is a 100% mark. Think about risk to reward. If I got into a call, I would want to get into it here because now all my gain is towards the upside. If I get in here, my risk to reward will be half of the size, right? Not a full size position, maybe a quarter size or a half position because we're halfway through the move. Are you with me? So where is the location of the trades you're getting? The risk to reward, all right? Hope you guys are enjoying this so far. If you have, smash that like button, all right? And consider subscribing to the channel for those who have not, all right? So we have our high and our low, all right? Now what about step 3? A two-legged pullback. Now we already got the two-legged pullback. See? We already got that two-legged pullback. So we're past that, all right? Remember, the context of this video was from the trade signal and last Friday's COT report. And so we're getting these moves and you can see we have that two-legged pullback, all right? Now, last but not least, all right, Now, I want you to think about strong markets pull back in two legs. All right. The first shakes out the longs and the second traps the shorts. All right. All right. And what do we have here? Come down, shake out the longs. All right. And then this leg right here is going to shake out the shorts. Why is that? Because price accepted here. Now we're going back towards the upside. All right. Now, step 4 is the delta. Delta on your option chain. If you trade options, if it's your first time listening and you've been watching me, you know that there's something called the option chain. Now, you can trade shares or you can trade the option. I trade options, which means I control 100 shares of any stock, right? But I don't own it, but I have the right to buy or sell it at any moment, okay? That's what we do here. We trade options, and it represents contracts. Each contract represents 100 shares, and you can buy as many as you like. That's just how this goes, okay? And so with that said, inside of the option chain, they have something called delta, and delta moves lockstep with the stock. That's right, delta. Delta moves lockstep with the stock. Now, if you want videos on delta, you guys let me know down in the comments, and I will do more definitions and videos on delta. But delta moves with the stock, and so inside of the option chain, if you see a number with a high delta, those are the ones that you want to go with, because the higher the delta, the more money you make with each dollar movement. So delta moves with the stock. Okay, for example, let's say we hopped into a call. All right, we got that breakout pullback and we wanted to get in at calls at 690. All right, and we had a delta of, let's just say, 0.60. all right, so we got in at 690. Each time price moved up $1, 691, we're making 60 bucks. 692, we're making another 60 bucks. That's 120. You do the math, and so on and so forth. And that's the way you count your money. All right, now depending on how much you spend, that'll be a percentage for you, a percentage gain. So I wanted you to think about that. All right, now gamma flip. I want to emphasize this. My entry comes on the reclaim above the gamma flip. Now, I want to say that. Now, we know that gamma is above 90. 90.05 is the gamma split. Now, you can't see this now, but I give out this data to my tier 2 subscribers, all right, that have joined a thriving community. That link is below if you want more detailed explanation, if you want more live reactions, if you want to learn how to fish, then we are here for you. We would love to have you. All year last year, we hit it out of the park, and we don't intend on stopping 2026, all right? But that's when the dealers, they go from suppressing price to fueling momentum, and you need to understand that. All right, now let me pause, all right, because I want you guys to understand what's going on here. All right, this is exactly what we do inside the Unique Trading Group. Not just trade signals, though yes, we have those, but more importantly, we teach you how to fish. The members learn structure, order flow, gamma, and professional execution. We've got traders in the Discord right now who were skeptical at first. Trust me, they were skeptical at first. But until they stopped guessing and started seeing the market clearly, that's what happened. So if you want consistency, education, and a real community, that link is below. All right, now let's get back to the chart. Now, here's the January signal proof. Again, you guys remember that we had this proof here. You see that? All right, we had the signal. Price has been playing out ever since, I would say. Okay, now inside the Discord, this was guidance I gave out on the 11th, all right, at 9:46 p.m. All right, and you guys can check this out as I scroll, but I was pretty much giving people guidance on SPY and the market and what we wanted to do. And a lot of these things, they played out. All right, pretty much we waited for structure. Right, we waited for structure, the delta and confirmation. We didn't do any chasing. We understood the highs and lows and risk to reward. That's what we did here. Okay, and inside my Discord, I give out these in detail, and you guys can check them out. But the bottom line here is smart money is managing exposure. All right, they're not exiting. The edge in 2026 will come from structure, order flow, and discipline execution, not prediction. All right, so you guys need to stay patient, trade location, and let price confirm. Right here to the left, all right, I have my trading signals, day trades, swing trades, and scalps. All right, we also have a book club, stock talk, free community for those who want to join to get insights and talk with like-minded people. We also have some instructions here down below For anybody new that needs instructions, we have a learning vault. We have exclusive trades, real estate gems, and this market breadth throughout the day, throughout the week. It tells you where momentum is, right? It's choppy. Should we be trading today or should we not be trading? Is it risk on or is it risk off? All right, these are very important. Why? Because sometimes the best trade is no trade. I want you guys to understand that. Now, why does this work with the trade signal, with the daily price movement range, and us marking our highs and lows and understanding texture? The context and structure of the market. Why is it important? Because rookies chase breakouts, guys, and professionals wait for traps. If you're not familiar with the human element of trading, human behavior, right? Professionals profit from human mistakes when it comes to trading, the experienced ones. If you don't know about it, check out my video on my YouTube playlist called Profiting from Human Mistakes. All right, that is in my video description for you to subscribe to the channel if you haven't, and check out the playlist. It's there for you guys to learn. All right, so now we got the Qs, look the same, watch for the same move. The IWM looks a little bit stronger, I would say, right? Small caps. So it's like people are rotating their money towards small caps. That's what the IWM is. It's representing the small cap, a little bit stronger than the SPY and the Qs. So keep that in mind on a rotation, a very selective market. Okay. Also, we're going to get to the MDY, which is the small mid cap. All right, this is the 400 ETF small mid cap, and this is also showing a little more strength than the SPY and QQQ. So MDY and IWM, they're showing more strength, yes, and the SPY and QQQ, they are slowing down. Now, this has been a representation of the halftime show, and I guess you guys enjoyed it if you stayed around this long. That is my thesis for you to wait. All right, Tesla right now is hitting all-time highs and it's pulled back, right? And right now we got to get above that 21 in order to see high prices. But as long as rookies chase, we're going to continue to be inside of these range expansions. All right, my daily price movement range from weeks ago is here. All right, and we've since then fallen below it, and we've been bearish ever since. See, my trade signals work. That's right. I have a simple trading plan called the DPMR system, the daily price movement range. That's also inside of my YouTube playlist, guys. So it's there for you if you really want to learn. Thank you guys for joining this video tonight. All right, this is the halftime show. All right, where we pause and assess and execute the second half with clarity. That's what's going to go on. We got 2 more weeks left in January, guys. Let's execute. Let's do this right. All right. If this brought any value to you, like and subscribe and stay locked in, because 2026 is just starting and smart money is already showing its hand. All right. Remember that price is human behavior. Learn the behavior and the market starts making more sense to you, because you are human yourself. Self-development is very important. And don't worry, I'm going to be dropping a plethora of videos for you guys. That's right. For beginners who are listening that want more content for beginners, it's coming. So thank you guys for sticking around all year last year. And we got a new year right here, new and improved with a new mindset. All right. So thank you guys for tuning in. Until the next time, guys. Peace.